Do you feel it? Feel it? Feel it? Feel it? Do you feel it in the air? Air, air. Do you feel it? Feel it? Do you feel it?
Good morning, everybody. Okay, guys, we're getting a monster gap up this morning. Okay, the January effect kicking off to a nice start. Okay, so January effect kicking off to a nice start. Guys, Disney, beast, right? Massive gap up on Disney. All right. Watch for a gap and go. Remember, this is that play. Phyllis, did you add on Disney? I'm sure you didn't. You were scared. Oh no, I'm losing money. Oh no. I know you didn't. By the way, guys, if you wonder why, if you wonder why you don't make money trading, it's because you have to sometimes buy when you feel sick. Okay, or short when you feel sick. Okay, if you believe in the trade and the trend, if you believe in the force, Phyllis, you have to believe in the force. It has not yet awakened in you. Larry, the force is strong in you. All right. Okay, let's go through some of the trades here. Okay, so PCRX from Marty, PCRX. Really like the PCRX in terms of a gap up. I don't know how it trades. Looks like it's got a 25 cent pre-market spread on PCRX. Can run up to 80 bucks. So, I mean, you got a $10 break of resistance. Okay, let's watch PCRX. All right, guys. Another big gap up. So now the last thing I can say, Phyllis, is that the for you, it's now about how you hold Disney. Okay, so if you can hold them to see where they're profitable, and then you can run them. If it does run, then obviously that can still be a good trade. If you got in a little too early, too heavy, then you got to be happy to be flat. Okay? Because trading is about adding, when to add, and when to hold. Okay? So that's the lesson for trading. When to add, when to hold. Well, don't make a blanket statement. If it spikes and one of them turns profitable, take it. You know what I'm saying? So I don't know what your actual position is. Let me take a look at FFIV. All right, guys, FFIV looks to me like a gap and go down, and it's gapping against market direction. I don't really see any support either. $78. Phyllis, your target for the January effect list is to make $1,000. Pay for the class and then make an extra $500 for you to spend in Short Hills Mall. on Phyllis. All right. So we got FFIV, LL. Okay, guys, LL, beast of a gap up, okay? Possible short squeeze protect. I guess people are buying lumber for Christmas. Guys, this one may fade. So lumber liquidators, let's watch this one for a fade. It could also just gap and go. So when we say it could fade and it could gap and go, we say LL, gapping up. Momo, slight bias to fade. Okay, so slight bias to fade. So that's lumber liquidators. ADI. I'm not super ADI. I'm not like super crazy about, but it is a gap and go down. I'm going to go through my regular, so the on the market, QQQ, SPY, okay, DIA. My opinion on the markets is we really rallied up yesterday. We're gapping up. I would expect a check mark fade. Okay, that would be my take on the market for Tuesday. And for stocks like, I think stocks like Apple and Facebook, okay, and of course Disney, watch IBM as well. IBM is going to be a beast. IBM. Look for pullbacks and breakouts. VRX I like to stay away from. I know that a lot of people like to trade it here. VRX is exploding to the upside for Mike Gargano. This is kind of a news-related stock. Okay, VRX is gapping up. I do not trade VRX. Gap up. So you guys play that at your own discretion. Guys, I do really like X. I love the daily chart on X. Remember, X is gapping up. X is gapping up to 785. Okay, actually maybe even 8 on the offer. So I really like X to the long side based on this possible 1, 2, 3. All right, guys. I'll be back in 4 minutes. All right, guys. I'm going to do a little bit of a recap. Looks like Twitter has come back quite a bit. Let me see if that's correct. No. Guys, but watch Twitter for a recovery. Ah, there he is, Mr. Scott Littlefield. About the performance, Scott? Yeah, I did get the email. By the way, guys, X starting to move out. Chug, chug, chug. Ooh, I'm up. I'm green. Facebook. Let's see Facebook. Going higher. Okay, guys, this looks like a day of slow trades. So I do think Facebook's going to go higher. I'm going to sell a little bit here. Okay, I do think it's going to go higher. I'm just going to put a stop past my entry on some. Actually, I'm going to use the actual proper technical stop, which is, let's just say 105.49. I'm going to do 46. Yeah, it's good. Did you, which one are you talking about? I'm not following. All right, give me a minute, guys. I'll be right back. Guys, while Mike takes that call, I was real quick on today's note. Given the fact that yesterday did close strong, closed a nice green hammer at support, I was bullish coming in today, especially if I saw any strength early on. Ideally, not necessarily a gap up, but if we did get a gap up, the fact that we added to it here. I think the first keynote was that we broke pre-market high resistance. Of course, we actually did that before the market opened, but then we made a nice impulse. We pulled back to the 20 EMA. We just broke up, so it's very tight. What looks to me like a bull flag setup. The trend at its lows, right, which is where I want it, and also a very low number overall. 0.6 I think is a nice bullish number. The trend. The VIX is the only thing that's not necessarily weak, so that's the fly in the ointment. But I'm okay with it here, and given the fact that I still missed the early morning impulse, but the fact we've had a nice retracement of that move, in fact, from the market open itself. We retraced 61%. So overall 38% from the pre-market low, but from the market impulse open, this move here, we retraced 61%. So I think price structure is strong, bullish. I think the internals overall are bullish here, and I'm looking for us, to go higher. So I'm actually going to look at a long here. I want to make sure I'm not. Let me look at the whiteboard here, because one thing I'm looking at here is a relatively inexpensive, or one of the cheaper net stocks, eBay, getting ready to break its highs. So I don't see eBay. I don't see eBay
on the whiteboard. I take it eBay's not been called, right? No reason it would necessarily. I just want to make sure I'm not, because I'm going to call it here. Right? As long as we're not in eBay. When I say call it here, actually, I'm going to give you an entry price on it. I wanted to take out the highs, but I'm looking. I also like Apple here, which just broke the highs as well. The only problem is it takes me forever to pull up option chains on it. eBay is a cheaper play, so I'm looking for it to take out its highs at 28.52. There you go. It just did. So long eBay here at 28.52. Stop loss for me is where the trade goes wrong, and that's, you know, technically below the low a day, although we could use the 28.30, but I'm going to use 28. Let's use 28.12. Okay, below the low a day. So that's a 40-cent risk. Now the way I typically would trade it is my unit of risk as a percentage of the, my portfolio. I would typically risk between 1% to 2% depending on how aggressive I wanted to be. I would never structure a trade for more than 2% risk. So typically what I would do is let the stop loss define that. So if we have a 40-cent stop loss and I want to risk 1%, so if I say I have a $30,000 account, I want to risk $300, then 300 divided by 40 cents would tell me how many shares I could trade. So that would be 750 shares if I wanted to risk. If my unit of risk was 1% of my portfolio, which typically would be on a trade like this. If I wanted to go up to 2% and risk, $600, and you're trading, 1,500 shares. So if I had an option chain, I'd also give you intraday options. I would look for the weekly options. I don't know what the prices are on them though, and I'm still trying to get an option software that I can, it's easy for me to use so I can pull it up. But anyway, I do like the markets higher here overall. eBay's the call. I do like Apple as well. But then what I would typically do is manage the trade based on that, that stop loss as sort of a, an ATR or a true range. So I would target 40 cents for half off and take stops to entry. So half off at plus 40-cent gain in eBay, and then move stops to the entry. So I have a risk-free trade at that point.
Scott, I just bought 100 shares. I just bought 100 shares on eBay.
On my call, or you did it on your own?
You need the numbers. I just did on your call.
Oh, okay.
I just did on your call.
I wasn't over trading someone else's call here, so good. Well, we'll see. I like it. Knock on wood. We'll see how it goes. Anyway, guys, I'll come back after Mike finishes his recap. I'm here, I think, for the rest of the day, or at least much of it anyway. We'll see. I'm waiting for the next sign. I would like the VIX to weaken a little bit more. But that is sort of what I'm looking for here. So.
All right, guys, I'm just going to do my recap. We had one good gap fade today. I mean, we had a couple of others, but we had a lot going on with the January effects maintenance and management. Some really good calls already on this year's list. The first one that I wanted to just highlight is that we had a great gap fade on Lumber Liquidators. Okay, that was Lumber Liquidators was up on momentum. Bias to fade. We got a good fade. X made a nice run on the daily chart on morning momentum, and then obviously we're in it again for the 5-minute buy setup pullback. Disney Beast, obviously Disney already took out one target. Disney is already continuing to chug up to 112. I mean, it's almost up at 113. IBM was a nice gap up and go. I didn't take a look at the FFIV, but I'm going to look at it now. FFIV is a massive earnings reversal or reversal. Definitely not a good gap and go down, but a great gap fade and a gap that bullies. So now it's a short squeeze. Looks like FFIV is a January effects play as well. SUNE also looking that way in terms of being real strong. All right, guys, I'm done with my recap. I leave you here with Scott. You guys can watch the trades. I'll be back there at the end of the day. Bye.